Hello, welcome everyone to the weekly Delphian meeting. Thank you for tuning in. So today's agenda, we'll go through our regular market update and then go through the earnings trade so far and then have Joe's analysis to finish it up. So let's get started. So you can see market overview wise, SPX, all the indices still in one. All of them pretty much had good, state ones so far. Sector wise, all of them, back in one. XLE was the only one that popped in, 5 days ago. So everything in one right now. So I think Joe did some analysis on that. I'm not sure if that's a great thing or not initially, but Joe, are you going to go through that analysis today, or you going to do that?
Just at a high level, Josh, it's only happened 15 times, in the 18 years of the database.
Okay. Yeah. So we'll take a high level view. Joe will go through that. As far as market pulse, you can see we're well above 45, which is the overbought for state ones. We're at 50. So it's up from last week. And then, the pie's kind of leveled out right around this kind of mid 70s range. So it's up a little. Eights are way down. So let's take a look at the actual market pulse here. So, kind of at least the last time here, we're right around 49. We're right at 50. You can see this long run up. We kind of like hung right around that kind of, upper 40s level for a long time. So, if that happens, obviously it's very bullish. As far as twos going into ones, we don't have much, percentage wise that can keep on coming up, but we still have six. We've had decent move in the sevens, and since Wednesday it's just kind of flattened out. So I think market, we've had the ones climb some, but overall, the market's been, well, at least SPX has been down a little. Russell's holding up a lot better, the past week or so. So, and I think that's reflected here. Yeah, we're still getting some decent highs, nothing on the lows. So, this, at least, this indicator that we follow is still telling us it's, still bullish overall for the market. So we start getting a spike in lows, which is pretty much nothing. And that'll be hard to do if, we only have 15% in eights. That's where the lows are made. So, we'll just have to wait and see on that. All of these are still well above. The 20s would be the first one to roll over. Pretty decent down day right today for most of the indices, but Russell's holding up, which that has the largest number of stocks in it. So, and let's just pull up the bullish bearish. Excuse me. See, it's just kind of like flattened out here. So, this above the previous high here. Obviously not up, in the 80s type, but low 70s, just kind of flatlined here. So I would expect, with the action today, we may be getting some movement down on here, but we'll have to wait and see. Let's look at SPX. So obviously let me get the tool out. Had a pretty typical one, got the dip, ran up, resistance popped up, and now, I think 54.82. I think we're below that right now, 54.54. So, that would be a support level they would like to be held. You can see it was a big resistance here until it finally popped and then exploded higher for about 2 weeks. We've had to pull back, so now we're right below that. So I think that's one of the kind of key levels. We've been in here obviously longer than average, made higher than average move. So it's been a good state one overall. So let's go to the actual charts here. So, the two kind of main things, and I'll pull up let me get the line here. So that's the 5,400. So, we're above that, not a lot. This is the 20-day. We're pretty good, well below that right now. And then the next one would be the 50. So we did have a a breakdown right here on the 20 and a pop back up. And so we're down below again today. So what I'd be really watching is the 50 right there. So that's 54.34. And then, the bottom of our range is 5,400. So that's right below that. So there should be really good support. Down if we get down into those levels, and we're not, 54, 58. So we got 20 points to that 50-day, and then 50 something down to the bottom of the level. So that's what I'd be watching there. Obviously, we've had days where we pop below there. So getting above that would be very bullish overall, but we'll just have to wait and see on that. Last time, on that big run up, we had a down day there, kind of came up, tried to get above it, another down day, tried again. So this is, if it's kind of mimicking that, this would be where we're at right now, this, second down day. And then from there, we had a nice little whoosh, nothing huge, decent pullback, and that was it. Kind of regained our footing and off to the races. So could be some kind of similar setup here. Yeah, but that's just for SPX. So let's look at Russell. So we talked last week, if we can get above that T3, so you can see pretty great algorithm here with the price targets. That target 3 is always very important. The high that we had was, on this day, and it just closed below, but pretty much had, pretty much 4 days trying to get up there and fail. So that's your resistance, 2268. As far as here, we had the entry. So 2100 is kind of the big one. I don't see much down, at least this chart wise, between there and kind of the bottom of the range. So kind of a wide range, but it's been holding up. Even today we're just kind of right in here. So this one has been, outperforming short term as far as the other indices. So, we still got a long way. 9 out of average 36. So, we did hit pretty much above the average move. We're sitting right at it currently, but we did hit higher than that. So we'll just have to wait and see. Let's look at the bigger chart. So I'll put up the range. We're firmly in the 21 to 23 range now. You can see down here, the 50-day is kind of like right on that. So this obviously critical level to hold. We're well above that. And, like we talk almost every week, we can also look at that 2,200 as being, we're above it right now. So that'd be support, or, if we're below it, it's resistance. Pretty much every 100. That's how this thing's been behaving. But well off the 50, well off the 200. So we'll see if rates start coming down, if this takes more of a leadership role. Obviously it's more sensitive to rates than the bigger cap. So we'll have to wait and see on that. So those are your kind of levels. Pull up 10-year. Where'd it go? There you go. 4.2 something. So not a lot of movement over the past week or so. Just, I think, I didn't mean to do that. Being jumpy, pretty much pretty flat. Not doing too much recently, just kind of finding its level. So I think really it's going to be depend on Fed language, cut expectations, things like that. See where we go from there. So speaking of Fed, so this is July, still nothing. 93%. We're a week out, so I wouldn't expect any cuts. No change really from last week. Maybe a smidge for a cut, but you know, data wise, we do get some data um, tomorrow and Friday as far as inflation. Get some PC quarter over quarter. Um, and then, Friday's kind of the bigger one. You get month over month, year over year. So sentiment, a lot of stuff. Friday could be a big one, depending on where things go. But month over month, nothing. So that's like a 0 year over year. So, I think if these things kind of come through how they're, forecasts, that'd be bullish overall, inflation wise. Previous 0.5 could be a 0.4, 0.3. So these things are a big, part of what's driving, the market right now and, what the Fed's doing. So first cut is September. This is a quarter point. This would be, 50 basis points. It's had a little movement towards 50. I wouldn't expect that unless we get some jarring um, inflation numbers. And then, so that'll be pre-election, post-election, definitely one, maybe two by November, and then December. So that's one, two, possibly three. So not a lot of movement week over week, but you can see month over month, it's big movements. So really all eyes on Fed for next week. Balance sheet, this one seems to be kind of flattening out a little. I mean, yeah, we had a nice trend line. This not much, so that's over a month ago, June. We've had, 30 billion. So it seems like it's starting to flatten out a little. I mean, this is kind of like the right after COVID was at 7 trillion kind of level. So it seems like they're starting to flatten things out. Obviously, that's bullish. If we're tightening less, then that's a good thing. So, I didn't have any good charts. Been kind of weak on Twitter for those charts. So I think that's it for market. I'll open up to questions, comments.
There's not too much happening. It's
Yeah,
summer doldrums, man.
yeah, and surprisingly, like we got big earnings weeks, like lots of numbers coming. So yeah, it's just definitely summer doldrums. It's a good way to
Yep.
put it. All right, thanks, Dave.
Earnings should drive things probably for the next 2 weeks or something. I don't think until we get inflation jobs report out for August, until we get into August and Jackson Hole at the end of August, that's not going to drive much. The earnings are going to drive things for the next few weeks, I think.
Yeah, well, yeah, definitely. Okay. Anyone else? Questions, comments on the market? All right, I'll go through earnings trades. So we had, oh, whoops, sorry, wrong one. All right, so this should be quick. Bullish pre-runners, yeah, I'll just run through these real quick. So we've only had two. They both hit their profit targets, so all good so far there. But just not that much action. Bearish pre-runners has been more active. So had three. These all close out winners. So we got three open. This AMT is not doing well. These other two, especially Wayfair, they're down big today. I probably hit today, and Monera's down pretty decent today too. Just this one kind of pain in the butt right now, but the other ones are, overall we're up. So it's going well there. A bullish runner. This is the one trade. Goldman, it's not doing great. So, down some change. Yeah, we'll probably have a lot more of those trades later on. Yeah, Volrise, this one just came in. IAC yesterday. So, you got till the 6th. And those other bullish bearish pre-runners, we still got like a week on those too. So, and then the non-mover, this one was unfortunately dropped pretty good down to the lower band here, the 260 put. So we're kind of right on that. We got till the 2nd. This thing come back. It's still down a little today too. Last time I checked. So yeah, we want to get above 260 and see if it creeps back above. This one's typically done well. So a lot of these earning trades, when we see those big dips, over the next week or so, they usually start climbing back up. Not all the time, but if they can get above that 260, hold above there, it usually climbs up higher. So, and tries to get back to the original price, but no guarantees there. It'd be a pretty decent move above, but at this point, if you get a gain, just be trying to get out of it, but you got time still. So that's not a good start for there. And that was it. I think we had two pop this morning. So Disney, the usual ball rise with Disney. That one's always in there. And then this bullish pre-runner AMT. So, and all the semiconductors down pretty good today. So, we've seen that in the past a lot. They have these big drops and then they have these big back runs up. So just wait and see. You can see Wafer down big today. So this one's just being a pain. So, all right. So that's it on the earnings. Any questions, comments? Anything overall before Joe takes over? All right, Joe, I'll hand over to you.
All right, Josh, everybody, thanks for joining. Let's see here. All right, as usual, we got a few charts. Yeah, as I mentioned earlier, only been
I don't see your screen, Joe.
Oh, you don't, Josh?
No.
Okay. Hold on, I thought I had already shared. There you go.
Yep.
Thank you. As I mentioned earlier, just 15 periods where the sectors have all been in state one at the same time. I have not analyzed those periods yet, but you can see it's damn rare. Last time it happened was in 2021. Prior to that, 2017, 2016 before that, and then 14. So it's an awful rare occurrence. We know the history of the markets here. I mean, basically, if you look at 2021, it was basically the April-May period of 21. So it was, what, 6 months, 7, 8 months, before the market had the major top, driven by the Fed rates. So, it'll just be interesting to see, what the future holds. I've got some other data suggesting that, still, I think we got a long way to go to the upside. And next week also, I want to, there's a lot of chatter out there about, prices, the American public, fed up with high prices. I will look at some of the consumer cyclical stocks next week, to see how they're fending. And, couldn't agree more with you, Josh and Dave, that, the next couple of weeks, it's all going to be about the earnings. I think our sell-off here, and, there's some violent moves happening. I think it's all about profit taking. We're due for a correction. I mean, if you look at the charts, which I'll start with NASDAQ, because, NASDAQ has been the leader. NASDAQ from the April 19th lows rallied, 22%, from April 19th. So, we should have a sell-off from time to time, and, pick your poison as to why it's happening at this point. I happen to think that what happened over the weekend with regards to politics brought an uncertainty into the market that, of course, the market doesn't like. And I think, if you're looking for an excuse to sell and take some profits, I think, the political uncertainty can be a pretty good excuse this week. As I mentioned before, sometimes I listen to the talking heads at night, and, the NASDAQ and the techs rallied on Monday after, they had rolled over previously, actually starting on July 10th. And that's another thing. The techs, topped out on the 10th of July, and the S&P didn't top out until the 16th. So it just kind of, another signal that NASDAQ continues to lead. But again, a couple of the talking heads were suggesting and I think the NASDAQ was up well over 1% on Monday, that part of that was because the new Democratic nominee for president, Kamala Harris, has a relationship with Silicon Valley, being, out of Northern California. So, a couple it was Kramer's, Adami, a couple of guys were talking that same thing. I was a little surprised by that, but hey, it makes the world go round. So, we'll see how that plays out going forward. Her relationship with Silicon Valley. The other chart I want to pull up here, just in terms of, some targets. Josh talked about it, a little bit, and we're working off of the April 19th low in NDX, and a couple different approaches here. We've obviously got the retracements. So the retracement, and we're basically at 19.1, I think, or 19.150 right now in the NDX, the NASDAQ 100. That is right between a 3/8 retracement and a 50% retracement. Something else that I think, can be a meaning. So, I think we're in a nice little correction here. Another level that I would suggest would be somewhere around 19,000. The NDX topped out at 20,000. The last couple sell-offs in NDX, distance below our moving average has been about anywhere between 800 and 1,000 points. That would point to the 5350, the 1900 level. So maybe we got another 150 points. If we're to go to a 50% retracement, we'd be down to just basically below 18,900. So we're backing and filling. You can talk about, well, it's not even worth talking about Elliott Wave at this point yet. I think it's just a natural back and fill. SPX, as I said, topped out a week later. SPX, from a 20-day moving average point of view, you may be targeting just above 5,400, number that Josh talked about. And, in terms of retracements, we're talking basically 5,400, 5,300, and, 5,200 in round numbers. So, bring it on. Nothing extraordinary here except a correction after, essentially a pretty monster move. NASDAQ, or excuse me, as I said, NDX rallied 22% off of the April lows. It was more like 12, 13% in the SPX. Russell, thing I just wanted to pull out in Russell, from the November lows in Russell, we rallied damn near 25% in 2 months. We got about a 13% rally, since the middle of June. Just nothing more than a back and fill, no real insights. But this is where I did want to talk a little bit about, what we were talking about last week. And that is, the move in the green pie. And we talked about the general moves last week. And, basically over the last 10 days, we got basically a 35-point move, in the green pie. And, from a percentage basis, obviously, it's less of a percentage, when we're starting in the mid 30s than in the 20s. But anyway, it's still, something to take a look at. And, my thinking is, and my gut to all of this is that, it's just suggesting strength in the market, not, as Sadir was asking the question last week, is it a top? So, we'll go through the chart. I went back and analyzed this more closely, and there are basically 18 periods, periods, where we've had the pie increase by, a similar amount as it did a week ago. And, of those 18 periods, and what the chart's representing are the time frames when this has happened. So I just visually was it a top? Was it a bottom? And I'll expand this all the way back to 2007. But those, bubble numbers are when, the pie has moved that much. So with few exceptions, it's nothing but, the beginning of a nice upward move in the market. Again, a total of 18 periods. I forget exactly how many days, it doesn't really matter, but 18 periods. 7 of the 18 years don't have any periods where the pie grew this much. So it's not a common occurrence. And 15 out of 18 times, we got, I would say, monster runs out of such a move in the pie. Twice. Well, let me just see if I can move this thing.
And those are for all the major indices, right, Joe? That you're talking about periods for.
And I didn't go through all of them, Dave. I basically, looked at just the SPX. Okay, so I can go deeper.
Yeah, I got you. That's fine. This was clarifying.
I just thought that that's maybe the most representative index, which is why I picked it. So there were 2 drawdowns. There was one in 2022. Let me see. I think it was right here. We got an 11% drawdown. Because we got the move in the late July, August period, and then we had a sell-off. So that was one of the most significant. And then what I start to think about, and then we turned around and a couple months later, away we went to the upside, basically in mid-January, we got the same signal. And, we got a similar drawdown in 2015, which similar drawdown here, 10-11%. But and I haven't put any dots together, but we know that basically the fall of 22 was the last major low in the market, and the pie was clearly early before we sold off, but it did correct and keep heading north. So I will roll this thing out to the 2007 period. I think it's a pretty good bullish sign for the markets. And back to your comment, Dave. I mean, I think the market's going to be driven by earnings over the next couple of weeks. We'll have a lot more to talk about in terms of what the expected move or the expected increases in earnings were versus what's coming in. And we see whether or not the market is just having a simple correction after a big run, or whether there's something more significant going on, which I don't think will be the case. So anyway, I just did want to follow up about I think what our platform, and in particular the pie, can offer, again, in terms of odds for upside or downside, building confidence in when to invest. And I would suggest that pie move, a week or so ago, is suggesting that there are good things ahead. Let's see, there were, back to the ETFs, 3 of the 11 have exceeded state 3 targets. Okay, 3 of the 11, I know they're all, bullish state 1s, but 3 of the 11, not a surprise that XLK. And, we'll see whether this thing, how this thing does going forward. Again, we're in a market correction. Nothing wrong with that. And then the consumer discretionaries, which I really did want to get into them individually today, but didn't have the chance to do that. We'll get into that next week. What do we got here? 30 days, still have time in terms of, an average move. So nothing in excess here with the consumer discretionaries. And then the third one, which frankly shocked the hell out of me, was the real estate ETF. And, that did surprise me that exceeded, target 3. Now, certainly, there are obviously different percentage levels with the various target 3s, but, I thought it was interesting that of the 11, the real estate sector was one of those that has exceeded target 3. And, we're starting to bang up against average time here, so we'll see what happens. Just let's see a couple more. The semis leadership. So I just thought we'll take a look at them from a retracement standpoint. NDX and the semis topped the week before the S&P 500, as I mentioned. I guess it was the 11th for the SMH. NASDAQ, I think, was the 10th. So, we're backing and filling. We got to a 3/8 retracement. Will we get to 50%? We'll see. But it's just a very natural, movement in the market at this point. And I would suggest a buying opportunity. And lastly, just NVIDIA. Let me see, these recent lows were 117. So yeah, I think, trading at new lows today, but we talked about it last week. It's not the end of the world if this thing back and fills. And, whether that's going to be in the 105, 110 range or something higher than that, we'll see. But just that I'd pull that up as well and, let you see what the retracements are. Again, April 19th, is the meaningful low that we're working off these numbers from. And we've had some big runs since then. So That's what I wanted to cover. Happy to take any comments or questions.
Joe, you talked about, you mentioned briefly about the, Biden dropping out thing, and I didn't see that having I think the impact on Thursday, Friday, or Friday specifically was more due to the outage that CrowdStrike and Microsoft presented to the world, when automatic updates shut down a whole lot of computers everywhere. I have a niece that was trying to get back from vacation, and I think she just got back yesterday from when she should have been like home last Friday because airports were shut down. I think there's probably more. You're talking about uncertainty of the world when you can't get to your internet or you can't get your plane reservation because the computers are down. I think is probably a lot more attention getting than somebody dropping in and out of a political race maybe. So that was one thing that I noticed that I thought was significant on Friday. Now those there's some impacts to some of those stocks, and I think it's individual stocks that are going to be impacted by earnings more than that. I think the indices will probably kind of like ride out wherever they are. Kind of they pull back to this range, like you said, probably stick around here for a couple of weeks. But individual stocks are liable to really go crazy depending upon what they are.
Yeah, Dave, as far as last week, I totally agree with you. Thursday and Friday. I mean, it just speaks to our vulnerabilities, when something like that can happen. I think that in terms of the uncertainty for the market, I was really speaking to, this week and the continuation of the sell-off.
Sure.
Any excuse will do. We're due for
Exactly. Yeah, exactly what you just said. Any excuse, any uncertainty will do. Especially if it's a surprise uncertainty, then it has more uh, immediate impact one way or the other, usually to the downside when it's a bad surprise. So
agreed. And you've heard me say frequently, I'm not an excuse guy, like why it happened. But just in thinking about it, I can't get away from the whole political environment. It's just something I've thought about for the last couple of days.
Yeah, I think Microsoft is like at the end of the month, the last day of the month. So when the last of the biggies report it's pretty much my barometer for the next quarter. They've been down, I think so. They've been down. What Google reported last night, I think, and so did Tesla this week, and somebody else did too. So they weren't that great compared to last quarter or the last year, year over last year. But maybe they'll be good enough to keep kind of the indices where they are in range. I think they were close to when I used the 55 instead of the 50 moving average, and it looked like they were on pace to close below there today. But it's just one day, and like I say, I look for the next Friday where things are after this. The Friday after this one is to where they're liable to stay put for a little while, and then till September, October. I mean, we're in the not much happens in the late summer. So yeah, this is when I use my calendar trace to preempt for the next quarter, the quarterly earnings report after this one is where I positioned with the individual stocks from where they end up after next Friday. That's my modus operandi for a quarter ahead.
And then, of course, statistically, we get ready for, the statistical worst month of the year in September. But we'll see where we are before then.
Yeah, which is maybe why there'll be a rate cut in September to offset that. Maybe we'll see. We'll see.
Thanks, Dave. All yours, Josh.
Okay, yeah, thanks, Joe. Thanks, Dave. Anyone else got, parting comments, questions before we wrap it up? All right, well, thank you all. We'll do it again next week.
Everybody, thank you.